Can you guys hear me? Are we good? I always have this issue when I start out these live streams where it's like automatically muted. But hey guys, welcome back to another Dividend Happy Hour. Happy Monday to everyone. I am so stoked to be back with you guys. I really missed you. I'm super bummed that I wasn't able to put out a video yesterday, but I hope today it makes up for it. It is so great to be back with you guys for another video. And before we get into today's agenda, here's a quick cheers to all of you out there in the audience. I hope you guys have something cold, something strong, and something to take the edge off this evening as we talk a little dividend stock action. So cheers. Here's to you guys. Okay, so what we have on today's agenda, guys, nothing too crazy, except for I made a pretty big change to my dividend stock portfolio, as you saw from the title. And from the thumbnail, I'm guessing that you already know what that big change is. I ended up turning off the dividend reinvestments for my portfolio. I'll talk more about that in just a moment. But that's the first thing we have coming up on the live stream. After that, guys, I just want to share with you a quick little portfolio update, something really cool that I found on Charles Schwab, my brokerage, on the desktop platform that I wanted to share with you guys. Like I said, just a quick little portfolio update because I didn't put out a video yesterday, so I figure I'll give you a quick little update for my portfolio for the last week while I was gone. So that's what we have coming up next, or second, and then afterwards, well, actually, afterwards, guys, I want to talk to you about my, just a quick reminder on the posting schedule, because it's going to be a little bit funky this week. And then afterwards, let's get into a little Q&A, little hangout session. So hope that sounds good to you all. And real quick, guys, let me know in the live chat. Where's everyone from? Where are you guys watching from tonight? Where are you, where's your home base for investing? Let me know here in the live chat. Maybe we got a few neighbors here. You never know. So let's see. Got to go through some of the comments here. We got potatoes and gravy. Greetings from Seattle. Go Starbucks, home of my favorite coffee company. Heck yeah. Thanks for joining. Let's see who else we got here. We got Kama there from Phoenix. We got Captain Suburbia all the way on the East Coast in New Jersey. We got my friend Pat here in Michigan. We've got Dustin, wow, a lot of submissions coming in. Dustin over there in Reno, not too far from me, about a couple hours from Reno where I'm at. Who else we got? Suzuki Man, my good friend, there in Houston, H-Town. We got Kelly representing Alabama. Steven there in Elberton, Georgia. And then we got Jim out of Nebraska. That's right, Jim, I knew that. Jack all the way in New York, the big city. Chicago, for Wallet Invest over there in Chicago. You probably don't live too far from our good friend Russ over at Dapper Dividends. He's hailing out of Chicago as well. We got Taylor there from Texas, the never-ending highway from Massachusetts. We've got Taylor in Ohio. Long story short, guys, we have investors apparently all over the country. Very cool to see the dividend community reaching far and wide. And one other thing that we'll talk about too. I want to tell you guys a little bit about my Mexico trip. It was a lot of fun. But anyway, for those of you who are just now joining, thank you so much for hopping on. Just to reiterate the schedule of today's live stream, we are going to first talk about the big change I made to my portfolio. After that, I want to give you a super quick portfolio update. Third, I briefly want to talk about this week's posting schedule. In my last live stream before my trip, I did mention it. I just want to reiterate it so you guys know what's going on for this week, and then afterwards we'll get into the Q&A. So I guess, guys, without further ado, let's get into today's main video topic, which is the big change I made to my dividend stock portfolio. And you guys know what it is. It was right there in the thumbnail. I'm not trying to keep any secret from you guys. I'm not trying to sugarcoat anything, trying to hide anything, because we're friends. I wouldn't do that to you. So I turned off my my DRIP, my dividend reinvestments, and some of you have been actually like pushing me to do this for some time. I'm inspired by you guys in this sense, and pulling this up on the screen here. One of the key individuals, at least that stuck out in my mind, who was really, let me see if I can hide this comment. There we go. Who's really pushing me to do this was my good friend Zaldath, who in the Discord, they were talking about it, and he said there, you can see at the bottom of the screenshot, I'm trying to convince Ryan Williams to turn his DRIP off, but he's being stubborn. And you know what, guys, he's right. It definitely took me some time to make this decision, but over the last week, over the last few days, I was just really thinking more about it, and I think it's a necessary move for a couple of reasons. And before I touch on those, real quick, for those of you who don't know what DRIP is or dividend reinvestments, if you're here in the United States, at least you'll definitely know what this is. But basically, This is when you buy dividend stocks. When you get the dividends, whichever brokerage you use, whether it's Charles Schwab, Robinhood, M1 Finance, I think TD Ameritrade probably does it, Fidelity, all the ones. Did I already say Robinhood? I'm sure I said Robinhood. But basically, they'll all automatically reinvest those dividends for you. So when you get the couple bucks in coming in from Coca-Cola or Procter and Gamble or Microsoft or Apple, it'll just throw it right back into that company. And what I did, guys, is I just turned it off. I'm just going to let that cash build up in my brokerage account. And I think once a month, probably, I don't know, I might do it every single week, but off the top of my head, I'm kind of thinking maybe once a month, I'll just, at the end of the month or so, I'll go and manually reinvest those captured dividends into whatever stocks I'm thinking look good. And there's a couple of reasons that I decided to turn this off, guys. I mean, the first of which is really just my portfolio has grown to a point where, let me see if I can even just pull it up on the screen here. My portfolio has grown to a point, sorry, give me one sec. I'll pull it up as I'm talking. It's grown to a point, guys, where the dividends that I'm receiving every month amounts to about, it basically is going to give me like an extra week of contribution. So every single week in my portfolio, I invest $150, but on every single month, I'm getting on average like $135 to $140 from dividends. So like I said, it's basically an extra week of contributions. And as you can see here, my portfolio is currently valued at about $36,300. So, it's definitely getting up there. And at least for me, it's getting up there. And so I feel like I can really do some damage if I'm able to manually reinvest those funds. I mean, it made sense in my opinion to drip when I was just starting out, didn't really know as much about this stuff and didn't have as much in dividends coming in. It just made more sense to reinvest back into Procter and Gamble, into Coca-Cola, you name it. But now I feel like I'm at a point and I know enough about this stuff that I probably will make a bigger impact and maybe over time, optimize the performance of my portfolio by doing this manual reinvestment. And I'd be curious to hear your guys' thoughts on this in the live chat as well. But that's really the first, well, actually, that's like both the reasons I'm doing this. Number one, I'm just getting enough income now that I can make an impact manually placing that elsewhere. And number two, placing that elsewhere, I can buy more discounted dividend stocks in my portfolio. Like for example, if we go back over to the screen, I'll show you some of my worst performing positions that I could be reinvesting in. So for example, you can see here my worst performer right now is Intel. And if you've been following along the videos the last, at least last few weeks, even the last couple months, I've been stocking up on Intel, especially as it's come down. It's really, really come down recently, like dipped below $40 per share. So it's super cheap stock, been swooping that up. So with that, those dividends coming in, I could add more to Intel. I could add more to 3M, but I'm not buying any more of this company right now, I'll be honest. And I need to do some more research into this because I haven't kept tabs on it. But this whole lawsuit stuff with 3M has gotten me a little, I don't want to say concerned, but it's definitely not, I definitely want to learn more about it before I decide to add more to this position. And I actually want to know more on your guys' thoughts on this in the live chat. What do you think is going to happen with 3M? It's possible, depending on how these lawsuits play out, that they could, I don't know if bankruptcy is an option, but maybe a strategic bankruptcy. But either way, it wouldn't bode well for the dividend. So I kind of want to hold off on and see what's going on with 3M, or at least until I learn more about the situation to contribute to it. But hey, guys, there's always Starbucks. You guys know Starbucks has my heart. So I can take that $135, plop it right into Starbucks, pick up a couple extra shares every single month if I want to. Same thing with Verizon, where I'm down. Lowe's, I'm down. Snap-on, I'm down about 6.5%. This is another one, and I might make a video on this soon talking about Snap-on because it's been a while, but guys, such a great company. And right now for me is a really good opportunity to average down. So with that $135, I could pick up not a full share, but what is that? Maybe, I don't know, at least half a share. No, probably closer to 0.6 shares, 0.65 shares of Snap-on every single month. So that's not nothing, right? And so that's kind of my thought process in doing this. And yeah, that's kind of my thought process there. And there's one other thing I wanted to show you guys, actually, if we go back over here. This is from Charles Schwab. This is from my actual brokerage account. As you can see there on the right-hand side, you see where it says reinvest there? It's all no. So I'm just showing you guys this just to prove to you I did turn them off. I'm not blowing smoke. So we're going to be capturing those dividends. The cash is going to be piling up. And then I think once a month, I will go in and reinvest those funds. And I think that'll be a fun little addition to the portfolio update videos as well, just showing you what I bought with the month's worth of dividends. So definitely stay tuned for that. But There's another thing that I wanted to show you with Charles Schwab. As I was going through putting this together, I was just kind of playing around in the platform, because I don't really go on the desktop platform a lot. When I'm messing with Charles Schwab, it's always on my phone. I always buy stocks on the mobile app, which has been getting better over time. Charles Schwab, the app, is not the most easy to use, I will say, but they seem to be making some improvements to it, which is great to see. But anyway, I stumbled across this. This is like a little portfolio performance thing that they have on the desktop platform, and I thought this was really cool. I'd never seen this before. It's not in the mobile app, and the only performance it really shows for your portfolio includes the contributions you make, and that's when I'm trying to compare my performance to the different indices, whether it's the S&P or whatever. I don't want my contributions to play into that. I just want to see the unrealized gain and loss, if that makes sense, and compare that. So the selected period here, this is my portfolio's performance compared to the S&P 500. The selected period is just the last 3 months. So in the last 3-month period, my portfolio's returned a negative 7%, 7.1%, but still is beating the S&P 500, which is down nearly 13% in that period of time. Year to date, we're actually I was really happy to see this. We're doing really good, down just under 3% year to date, and I guess just down under 3% year to date compared to the S&P 500, which is down 17.5%. 1 year, we're doing really good as well. So, I was really happy to see some of these stats, and I'm really glad I stumbled upon this. And I think that this screenshot right here is something that I'll also work into like the monthly portfolio updates, because it's just, it's kind of cool to compare to those benchmarks like the S&P 500. So anyway, that's all I have for you guys on the main topic, which is talking about the dividend reinvestments. And now my question for you all, my question of the day, is what do you do? Do you automatically reinvest your dividends? Do you turn your drip off and manually reinvest them? What do you do? I think that there's pros and cons to both. Personally, I think for a beginner investor just starting out, just turn the drip on. Let those dividend reinvestments do their thing. And then as you get your bearing, as you figure things out, and kind of have a better direction with your portfolio, then maybe consider turning it off and manually reallocating those funds. And for those of you as well, having said all of this, for those of you who have, I guess, kind of coached me through that and helped me see that, and have been prompting me to turn off my drip, my dividend reinvestments. Thank you so much. I really appreciate, goodness gracious, really appreciate all of you guys being in my corner. So it means a lot. And, I said it earlier in this video, I'll say it again. I really missed you guys. I'm so bummed that I was not able to put out a video yesterday. But, life goes on. We'll get back on the straight and narrow here in the next week. And that actually brings me to the next thing I want to talk about real quick. And that is the posting schedule. So this week, guys, obviously we're doing this live stream on Monday. Usually I upload every Sunday, Wednesday, have been doing the live streams on Fridays, but we are doing today's special live stream because I missed yesterday. And I'm also going to be missing Wednesday's upload, so there will be no regular upload on Wednesday. I'm so sorry, guys. This Mexico trip, as fun as it was, it really messed up the posting schedule, which is okay. You can't let YouTube control your entire life. And it's actually felt really good to take a break, but I love doing this. So no video on Wednesday. We will do another live stream on Friday, and then it's back to regularly scheduled programming after that. So no video Wednesday, another live stream on Friday, and we'll do a normal video on Sunday. Then pretty much Sunday on, it's back to normal. So I want to go through some of these comments and see real quick what you guys have to say about drip. So Camera right here says it's wise to turn off the drip and invest as you seem fit. Thank you. Yeah, I agree. I think I'll be happy to have made this decision. So anyway, Taylor, this is kind of unrelated, but Taylor says, which brokers do you use? I'm thinking of switching from Vanguard to M1. So my main portfolio is in Charles Schwab, the one that I show you in all the videos with the individual holdings, Charles Schwab, but then I have my Roth IRA on M1 Finance, and that's just, I honestly forget that exists sometimes because M1 Finance just has been so easy to use. It's so hands-off, and so if that's kind of what you're looking for in a brokerage, M1's a great place to start. So let's scroll down, continue scrolling down. I want to see what you guys have to say about these drips here. Drip, drip, drip. And while I'm looking here, take another sip. And I got to be honest with you guys too. This isn't even a margarita. Tonight, guys, I'll tell you what. I had my fair share of margaritas this last week, and I could really use a break. I need to relax for a few days and cool it off the alk. So I figure a tall, cool glass of leche would would do me good. Okay, so anyway, back to the comments here real quick. So Devil X21 says, "What's up, dude? What's up with the title? Why aren't you doing drip?" Well, man, just to briefly reiterate, I'm getting enough in dividend income right now that I think it makes more sense for me to manually reallocate those funds into more undervalued positions or ones that I can average down on in my portfolio. So the way I put it earlier is every single week I contribute $150 into my portfolio, but on average I'm bringing in like 135, 140 bucks. So that's like a free extra week of contributions every single month that I'm getting. So it's like I could really pack a punch with that right now. And so, I want to try my hand at manually reinvesting it. And the good thing is too, if I don't end up liking it for whatever reason, I can't imagine why that would be the case. But if that does become the case, I can always turn it back on. No big deal. And then Delbomb right here, so on the topic of drip, says he drips 3 companies, but reinvests everything else manually, more flexibility. And that's something else I've considered too. I know there's some of you guys out there who it's not all or nothing. You'll selectively have drip on for some companies and you'll turn it off for others. And I've heard the reasoning before from some of you guys, but let me know in the live chat. What's your reasoning for leaving drip on for some and then turning it off for others? Let me know. I'm curious to hear. Let's see here real quick. Let's see. Okay, Dustin right here says, have had drip off for a while, just throwing everything at banks. Yeah, just being selective with how you're reallocating it. That's a big deal. Yeah, for sure. Johnny, hopefully you got my explanation here. I'm like 10 minutes behind on the comments, but Johnny, hopefully you got my explanation here. And then Kama here says, Kama again says, I'm a good enough investor that drip doesn't make sense. You have the knowledge to invest the dividends to the best stocks. Well, thank you. I really appreciate the compliment. I think you're giving me a little too much credit, but I'll take the compliment nonetheless, man. Thank you. Let's see. Jack here says, it's not worth turning the drip off for now for my account, but it could give me an extra few dollars every month, so I might reconsider. Does anyone think for small accounts it's worth it? See, I think that's what kept drip. That's why I kept drip on for so long, Jack, because I felt if I was only getting 10 bucks every single month from dividends or something like that, or 20 bucks or what have you, man, maybe I'll just if it's a couple bucks here and there for each position, just put that right back into the position. But I don't know. Maybe I'm off too. Maybe all across the board. Like once you really know what you're doing and feel comfortable enough to, decide where you're putting your funds and have a good grasp on this, maybe that's the instance where it makes sense to turn drip off. I'm not sure. I think I need to think through that a little bit more. But yeah, it could. It could be. Oh, here we go. This is a good point. Delbomb says you'll be able to grow your new positions to match your portfolio average quickly too. Yeah, that's another great point too. Any new positions that come in, if I want to work on building those out, I'll have that extra powder to put towards that. That's a great point. I should have mentioned that. Oh, Captain here says, Ryan, I was thinking in the future you might want to ping the Discord when you are about to go live. Yeah, I probably should. I know I make an announcement in the Discord every time. I mean, I do the same thing on the YouTube community posts, but I do put an announcement in the Discord. I just don't want to bug you guys. Like at this point, everyone knows what's going on, and we're on here for quite a while. So even if people don't join immediately throughout the live stream, throughout the hour or sometimes close to 2 hours that we do this, people end up hopping on. It's cool. And actually, having said that, guys, on the topic of the Discord, if you guys want to join the Discord, there's a link to it in the description of this video. And for those of you who are not familiar with it, it's a messaging app. It's basically just one big group chat that we have. And I don't know if I'm able to pull it up here. I don't think I can pull it up here. I wish I could because I'd show you the Discord. But basically, it's just a big group chat filled with a ton of dividend investors. Free to join. All you need to do is click the link. And it's been a really great resource for a lot of people. Really great place to learn. Really great place to connect with other investors, and I think the learning aspect is huge because there's people in there who definitely know more about this stuff than I do, and if you're active in there, you can really pick up on some great investing skills and investing wisdom. So I highly recommend joining. You don't, even if you just go and read through the conversations, there's definitely value to be found there. Let's see, what else can I say here? Okay, so Nick here says, drip until you hit $50 in dividends a month, then selectively reinvest. Yeah, I mean, even $50 a month, you could really, man, that's That's like 2.5 shares of AT&T at this point, picking up an extra 2.5 shares of AT&T. That's not too shabby. I don't know how many of you guys like AT&T, but anyway, that was the first stock that came to mind. Harris here says he does it manually. So Harris has his drip off. Suzuki Man says he's still on drip. Kama has his drip off. Shamir, my man Shamir, manually reinvests. Jacob here manually reinvest outside of 2 ETFs. Let's see. Coyote Sunglasses. I drip on all my long-term stuff. The rest just goes to cash. So yeah, definitely some mixed stuff here, but it sounds like a lot of you guys have your drip turned off. So I'm glad to know I knew I wasn't the only one, but I'm glad to know that it makes sense to not have it on for some of you guys. So I'm going to scroll back up to the top of these comments. We're going to kind of switch gears a little bit and get off the subject of drip and see what else we can talk about. I'm seeing some really good comments here that I want to address. Well, it's not that one actually. Let me find one real quick, guys. Take a sip. When you guys are waiting for me, take a sip there. Okay. Let's see. I saw a really good comment that I want to pull up here. Oh, I wanted to say this earlier too. Coyote Sunglasses, if you're still on here, good move with the mango margarita, man. That sounds delicious. It sounds really good. Let's see. Oh, okay, Charlie right here. Good question. Hi from Denver. What happened to Sunday's video? So I was out of town last Wednesday to Sunday, and in that time I wasn't able to record any videos, and I'm so sorry. I really wish I could have put out a video on Sunday, and I really wish I could put out a video Wednesday. But unfortunately, sometimes it just isn't meant to be. But yeah, Charlie, I was just out of town on vacation. I was in Mexico for one of my best friend's weddings. One of my best friends since kindergarten. I've been friends with this guy for, man, what is it? 20, probably close to 25 years now. That's so crazy to me. But yeah, I was out of town for that. Went to Puerto Vallarta, stayed at an all-inclusive resort there. The Hyatt Ziva is what it was called. It was really nice. Really nice. I don't know if you guys have ever stayed all-inclusive, but it's a really fun thing to do. And basically what it is, once you go, it's just like it sounds. It's all-inclusive. Everything's paid for. Once you show up, all the food's paid for. At every restaurant, they've got a handful of different restaurants across the property. Like, I bet there was 7 or 8 different restaurants you could eat at. All different things too. Mexican food, Italian, Asian, just, regular kind of random where you get burgers or what have you. Yeah, really good time. And bars, the same thing too. Hence all of the margaritas and hence my glass of milk tonight, because I just got destroyed, guys. Anyway, moving on to the next comment. Shamir says, good evening, bro. What's up, man? I was in the Apple store today getting my new MacBook Pro and couldn't help but think of you. That is too sweet, man. Too sweet. Oh, actually, Shamir, what MacBook Pro did you get? Did you get the new 13-inch with the M2? Did you go with the 14-inch with the M1? What MacBook did you get, man? I've kind of been chewing on the idea of getting a new one. I'm rocking the 13-inch right now still has the Intel chip, but I don't know. I'm seeing some really good things about those the M chips, the Apple chips. So I'd just like to upgrade soon. Okay, Hassan right here says, need your advice. What's your preference to buy growth dividend stocks, Microsoft, Apple, or dividend stocks with slow growth, Verizon, IBM, and 3M? That's a really great question, Hassan. In fact, the last recorded video I put out last Wednesday was kind of on this topic. It really depends. It really depends which stage of investing you're in, right? So if you're, someone close to my age in their 20s, late 20s, early 20s, even in your 30s, you might be better off going with stocks like Microsoft or Apple or Lowe's or, I don't know, some high growth stocks like that, AbbVie maybe even, that have high dividend growth CAGRs, because you have plenty of time, assuming that it's going to be decades before you can retire and live off that dividend income. You still have decades and decades and decades to let that grow and compound. And in that instance, because you have time on your side, the growth is really going to work in your favor. However, if you're someone who's closer to retirement, maybe you're a few years out from needing that cash flow, it's more immediate. So in that instance, you might be better off going with something more high yield, because you're going to need that income either today or sometime in the near near future, and you'll need to maximize the dollars and cash flow that you're bringing in. So hopefully that makes sense. The short answer, once again, it just really depends what stage of investing you're in. Me personally, I mean, as I'm getting deeper into this stuff, I'm looking more for growth, I would say. I still pay attention to the yield. I still pay attention to the growth. But I would say I'm moving more into growth. But with that said, I still have a pretty decent balance of high growth and high yield dividend stocks. Like I still have JEPI, I have XYLD, I've got Altria Group, I've got EPD, I've got ORCC, Main Street Capital Corporation, all high yielding, AT&T, Verizon, all higher yielding dividend stocks to kind of balance out some of the higher growth positions that I have, like Starbucks, Snap-on, Lowe's, AbbVie, handful of others as well. So hopefully that makes sense. That was a really good question. Yeah, great question. And then Zoatang TV right here kind of hit the nail on the head as well, just reiterated the same point. So anyway, let's scroll down and look. Let's scroll down and look for another comment. So Johnny right here says, in regards to 3M earlier, we were talking about it. I'm bullish on 3M. The lawsuit is bad, but will survive and buying the dip. Okay, well, that's good to know. You know, like I said, I want to read up on this a little bit more. This is my first time really ever dealing with something like this with a company. And I would assume too that 3M would be fine. I don't want to assume, but I'm kind of assuming that 3M is going to be fine, you know, in the long run. And it's just it's such a big company that has its hand in so many different things and makes so many important products. I'd have a really hard time imagining something bad happening to it, but anything could happen, you know, stranger things can happen. Never Ending Highway, right? He just says, save up all the dividends and buy more AT&T. You know, I've actually kind of been thinking about contributing a little bit more to AT&T recently. But I have a pretty sizable position already, so maybe not. And then Suzuki Man on 3M again says they'll probably get hit hard by the lawsuits, but it probably won't hurt the fundamentals that much. Yeah, we'll see. I do know that they've been paying out a pretty big amount of money to, you know, a handful of people. So I don't know, man. I don't know. Okay, let's keep going down, find some other comments. Take a sip while I'm doing that, guys. What are you guys all drinking? You guys have a cocktail or a beer or something over there? What are you guys sipping on tonight? Oh, lost my place, guys. One sec. Okay, here, I see a funny comment from Shamir I want to get to. One sec. I'll get there. Okay. Here it is. Ryan, what's this I hear about you coming out of a Dunkin' Donuts and loving just devouring the coffee there? You know what's funny, man? I do. I actually really like Dunkin' Donuts. You know, I obviously talk a lot about Starbucks. It's my second biggest position. If I'm going to go get coffee somewhere like that, Starbucks is my go-to. But I got to say, like, I'm not going to lie, I do really like Dunkin' Donuts a lot. A lot. And if they were public, they're not anymore, but when they were public, and this was before I was gung-ho about dividend investing, I actually think I had some Dunkin' Donuts, but I sold it for a profit. This was way back. Like, yeah, definitely before I started my channel. Dutch Bros too. I really like Dutch Bros a lot. And my girlfriend has some in her portfolio, which is, I think it's so cool that she buys stocks. She wants to buy Target. That's kind of the next stock she wants to add to her portfolio. But she has some Dutch Bros. Really like going to Dutch Bros. Really like going to Dunkin' Donuts. But I really love Starbucks. And, you know, I'll tell you what, too. Like, all across the board, I'm just a big coffee guy. So if someday Dutch Bros ever decides to pay dividend, or if Dunkin' comes back on the market and decides to pay dividend, I would consider buying into it as well, you know? Anyway, oh, Kama, yeah, you caught me, man. I knew you weren't partaking in an alcoholic beverage. Dude. And, you know, a margarita really sounds good, but it's just, I know it's not the best thing for me right now. Maybe Friday, like if I have just a few days off from the alcohol, I'll have one probably on Friday. And Kama, I think it was you. I think it was you. It could have been you or someone else, but someone has dared me when I hit 10,000 subscribers here, which hopefully will be in the next, like within 2 months, hopefully. Someone has dared me to take a shot of tequila here on the live stream, and I'll totally do it for you guys. I think that'll be a fun thing to celebrate. And if I do it, I hope you guys do it with me, because it'd be fun. Little fun thing we could all do together. So yeah, Friday I'll have a margarita with you guys. So um, let's see. Oh, Pokey DJ, Ryan, I appreciate all of the hard work you do for this community. Thank you, man. I really appreciate that. I appreciate the support that all of you guys show me in my channel. It's pretty surreal that we're almost at 10,000 subscribers. And it's been so much fun doing these videos, and it's been so much fun connecting with all of you. And furthermore, it's been so much fun learning from all of you. I said this earlier, but man, there's so many of you guys out there who know a lot more about this stuff than I do. And I'm very thankful to have you guys pointing me in the right direction, because, sometimes like I slip up when I'm talking on these videos. So you guys keep me honest and keep me in check, and keep pushing me to learn more. So I think I need that. I think everyone needs that. It's good to have. We're all after the same thing. We're all trying to be, better investors. We're all on the same journey here. Okay, real quick. This is for all of you guys in the live chat in case you didn't see this. Risk adjustment coding with West has a question. Does anyone know where the drip feature is in Webull? Thanks in advance. I'm sure Webull has drip. I'd be very surprised if Webull does not have drip. Okay, well, Chris here says M1 doesn't have drip. Auto invest, however, is on. Yeah, and that's kind of more or less the same thing, right? Let's see here, guys. Wow, Pat, good job, man. I'm at $215 per month with a $30,000 account. Wow. What's your portfolio's dividend yield? You've got to be up there in the, man, somewhere in the 5%, maybe even the 6% dividend yield range. Good for you, my friend. You got some high yielders in there, I'm sure. Okay, this is a great question. What are the main things you look at when investing in a company? Great question. And this is something I really want to get down on paper or something, because I really want to make a video or a sort of guide, or even like a sort of template, almost like the portfolio tracker that you guys can use to do your stock research, kind of a step by step by step. I have a really rudimentary one that I made months ago. I don't think it was very good. I think I could definitely update it. But to answer this question, what are the main things I look at when investing in a company? The first thing I do, let's actually do a little walkthrough real quick. Go over to the screen. Let's do this. Actually, you guys, let's do this. Okay. So let's say I'm going to research a new stock, and actually I have a really good one as an example. We're going to look at WSO, Watsco, which actually Suzuki Man showed to me earlier today. We were talking about it over Instagram DM. From what I can tell so far, it looks like a really solid company, and I'm going to be diving deeper into it, and I'll possibly make a video on it coming up. But let's say that I'm looking into Watsco right here. I just found out about it. I want to do some research. The first thing I do is it's super basic stuff, very surface level stuff. I'll go over to Seeking Alpha right here. And the very first thing I do, just because it's right in front of me when I pull up a stock, is I just look at the share price performance. What's it done in the last year? This one's down 13.5%. What's it done year to date? Down 17%. More recently, 30 days. Okay, it's about up 1% in the last 30 days, not too bad. Then I'll mosey on over to the side panel, take a look at the PE ratio. Okay, 17.4. Okay, that's not too shabby, but where is that in relation to where it has been? And then I'll go over to the valuation page, take a little bit deeper look into the valuation. Where is it compared to the rest of the sector? It's a little bit higher. And then where is it compared to its 5-year average? It's a lot lower. So compared to where the stock usually sits, it's looking to be considerably more affordable by about 36.6%, right? So that's kind of the very first couple of things I do. And then, obviously I want to know what's going on with the dividends, because that's going to be a real determinant on how interested I am to pursue investigating further. So dividend yield, okay, 3.5%, looking good. Payout ratio is a little bit high. For a company like this, I think it's a little bit high, 63.7%. And this company's in the industrial sector. So mentally, I'm comparing it to other companies in the industrial sector I have, like Snap-on, for example. Let me actually pull up another window here. So I could compare it. Can you guys see this? Yeah, okay, we're good. I can compare it to Snap-on. Same thing. Go over to the dividends page. Okay, about 50% of the payout ratio that Watsco has. So it's paying out a lot less of its earnings to the dividend, which, speaks to more to the stability of a company like Snap-on. But then looking at the 5-year growth rate, 15%, very high. So I do like that combined with a 3.5% dividend yield, which is pretty solid. And then the dividend growth history is 8 consecutive years. Once again, kind of comparing that to others in my portfolio like Snap-on, 12 years, not much more, but still more. 8 years of consecutive growth isn't terrible. And I'm totally thinking out loud right here, guys. Like when I'm looking at this stuff, the words you're hearing me say are the things that are going on in my head. And so it's just kind of a big brain dump to you right now. But anyway, going back over here, 8 years of growth, 32 years of consecutive payments. So there's definitely some stability there. I do like to see that. And furthermore, we're seeing a very nice trend up here. This is since 2013 when it looks like they cut their dividend back in 2012, which, upon further investigation, I'll probably come to understand what happened and why that is. But, since the early 2010s, they've been growing that dividend pretty steadily. And then once I kind of have that stuff out of the way, I'll go over to the financials page and just take a brief skim through. Very surface level stuff, super quick. What's the revenue doing? In this case, growing. So, okay, they're growing in sales every single year. That's looking really good. They had a really nice jump in 2021 compared to 2020. Great. Gross profits doing the same. Let's take a look at the bottom line. Look at that net income. Yeah, going up as well. So everything seems to be trending upward as it should. And then I can scroll down and say, okay, what's going on? Are they buying back shares? Are they issuing more shares? And unfortunately for this company right now, they are issuing some more shares, which I don't really like to see. I mean, we can see right here, they've been issuing shares pretty consistently since, well, shoot, guys, at least for the last 10 years, right? So, and it's minimal, like very minimal issuance of more shares, but still, like that can make a difference over time. And as investors, we want to see companies buying back shares. So that's not too great. And what's going on with the payout ratio? I mean, like we established a little bit earlier, it's a little bit on the high side. And historically, it looks to be sitting around that range. For the last decade, the payout ratio really made its way up. And I can't say I'm too crazy about that, but they did bring it back down here in 2021. I do believe part of that is because they had high amount of free cash flow in 2021. I skimmed through this earlier, so I'm kind of remembering some stuff here. So yeah, or in 2020, excuse me. So look at the cash flow, and this is one of the other things I look at with the financials, the cash flow. What's going on here at the very, very bottom line, even lower than the net income, the cash that's left over after everything, how is that looking? And then at least for 2018 to 2020 is looking good, but 2021 they had another down year, which seems to be kind of right in line with what was going on before 2020. So I guess that's not too concerning, right? And so these are just some of the things I look at. And then we got to take a look at the balance sheet real quick. See, how's the cash position looking? That looks to be increasing over time for the most part, except for 2021. It was down a little bit. And then how does the cash on hand compare to debt? So actually, sorry, I might be going a little fast. I apologize, guys. So remember, cash on hand in 2021 at the end of last year, 118 million. And then scrolling down, taking a look at the total debt, 369 million. So that leaves net debt about 250 million at the end of 2021. So that's not terrible, especially when we consider they had, 100 and something million coming in from free cash flow. So they could pay off this debt in the next couple of years with their free cash flow. That's not very concerning. The debt doesn't look to be too bad to me. One other thing about this company too that I forgot to mention that I did notice is that it is not quite yet a large cap company. It's in the mid cap range with a market cap of $8.8 billion. So maybe there's some more growth to come from Watsco. I mean, like what we saw with the revenue, which is trending upward over time, that does indicate to be the case. So, Wicked Crypto, man, I don't know if you're a man, but Wicked Crypto, that's the first thing I do when I look at a company. And if it kind of passes that sniff test, and what did that take us? 3 minutes, 4 minutes to go through? Once I kind of get a feel for it in that way, then I'll kind of dive deeper into the company and then start to look at what do they actually do. In the case of Watsco, they do things like, I think, heating and air as well as refrigeration and stuff like that. So it's a really boring company in the industrial sector, which actually could be a good thing. And they've been around since 1945. So, they've been around the block a time or two. So, they definitely have some history there. And so what I'll do once I go look at the stuff on Seeking Alpha, I'll go and actually probably take a look at the company website just see what I can learn there. Just go through everything that I can. Maybe even come here on YouTube and see if there's any videos of people talking about the company, or maybe people from the company, like the CEO or something in an interview. You just never know what you can find out there. And so from there, I try and look at it at the company from a more holistic point of view. And that's really where you get into the weeds with these companies that you're looking at. So yeah, in a nutshell, that's kind of what I do when I'm considering a new investment. There's one other thing I was going to say. I don't know. But yeah, all of these things, I really would like to. I don't know if I'll make a full video on it. I probably should make a video on it, but I want to put something together for you guys that you can kind of plug and play, literally a step by step that's like, you could just kind of fill in the blank for each thing, kind of go line item by line item to start painting the picture for these companies. And before I give something out to you guys, I need to make that for myself and play with it and test it and tweak it. So that could take some time. But that is something that I have notes so I don't forget to do that. But yeah, it should take me some time to put together. But I think that'd be a really important thing to do, not only for myself, but for you guys. And I think that'd be really helpful as well. So hopefully that answers your question. And actually, having said that, we just really took a deep dive on Seeking Alpha. If you guys are interested, I know a lot of you guys use Seeking Alpha for your own stock research. If you guys have ever considered using the premium version, which is what we were just looking at, there is a link in the description of this video to get $40 off the premium version for, I believe, any membership, whether it's monthly, annually, or you can even do like a year thing. But there's a link in the description. It's an affiliate link for me, so I get a little commish from that, just full disclosure for you guys. But I will say, Seeking Alpha using the premium, I've used it for months and months and months before I got the affiliate link, which I'm freaking so happy to have. Because it's been such a game changer for me. Really, just being completely transparent with you guys, the biggest benefit that I've noticed from using Seeking Alpha Premium, or that I get out of it, is having access to all the news, all of the articles, because just being able to read those because the free version, you get 5 every single month, and it's like, you could go through that in an hour. And so just being able to do unlimited amounts of research and get other people's opinions, there's a lot of great contributors on Seeking Alpha. That's been invaluable to me, and it's definitely been worth paying for, especially when you break it down. I think if you're looking at it on a monthly basis with a discount, it's like $15 a month, something like that. So it's really it's a really good deal. And yeah, so I do plan on making a video on that too, just kind of comparing the difference between the free version and the premium version, and talking about the best features of the premium version. Because Seeking Alpha also, I won't bend your guys' ear on this, but they have a really nice stock screener too that I've been using a lot. I've shown it in some videos. So let's see here. Let's move on to the next comment. I'm about 15 minutes behind on the comments, so I got some catching up to do, my friends. Okay. Let's see. Guys. Okay, Pat right here. What is your favorite bank stock? That's a good question. I'm not sure exactly. The only one that I have in my watch list right now is Bank of America. JP Morgan's obviously a beast. I don't think you can go wrong with that one. I think both of them are at a really good value right now. I was looking at Citigroup for a while. Definitely the cheapest of the big banks, I would say. And there was another one that I was looking at. It was more of a regional bank. It was First Source Corporation, I believe, ticker symbol SRCE. I really liked what I saw with that bank. So if you're looking for like a smaller regional bank, definitely look towards that one. There's some really solid regional banks out there. And from what I've heard, I need to do some research more into them. But the Canadian banks, a lot of people say that those are even better than what we have here. So maybe consider taking a look at some of those. Okay. Let's see. Kevin right here says, Ryan, are you still keeping reserves for the bottom? Not necessarily, Kevin. At any given time, I have a good amount of cash in my just checking accounts and stuff like that. Just kind of emergency fund stuff. Like at this point, if I was really being like frugal, at this point, I probably have about, I bet somewhere between 8 to 10 months worth of expenses just saved up in my checking account. And I know that sounds like a lot. I want to do that for now. I don't want to put that in the portfolio quite yet. I got some things coming up this year. I'm planning on moving soon, moving out of state. So I know some cash is going to go towards that. Don't tell my girlfriend, but I'm probably going to propose sometime this year. I'm just kidding. We actually talk about that a lot. You can tell her. It's totally fine. So I want to have some money for that as well. Just, buy a ring and stuff like that. I just have some life stuff that I want to save some cash for. So outside of my contributions every single week, my $150 contributions, that's good enough for me right now. And if something crazy really does happen, like if we really do we've seen a pretty decent downturn, right? But if we really see huge compression and an even bigger correction or crash or anything like that, whenever this so-called bottom does occur, if it's pretty substantial, I would reconsider. I do have the money to contribute, and I would probably throw in a couple grand or so, just to take advantage, but nothing crazy. Like I wouldn't just completely dump all my money into the market because I do want to keep some cash. So that's important to me. Good question, man. Haas right here says, what do you do for a living? Well, let's see. My day job, my quote unquote day job, is in digital marketing. It's in social media marketing. I live here in Sacramento, California, and I'm contracted through an agency. So I have an LLC. Pretty much everything I do, like YouTube pays the LLC. The work I do for this agency pays the LLC. And then everything else I'll do in perpetuity will go into the LLC. But basically, through the marketing job, I manage the social media accounts of various businesses here in the Sacramento area. And we've got a handful of different clients. Like a few of them are tourism, like a couple cities, like their tourism boards, like Visit Davis, Visit YOLO. We do work for them, so I'll manage their social media pages. There's a new hotel in downtown Sacramento who's one of our clients, so we do that. We've got there's like a health and wellness business that does like IV drips and cryotherapy, stuff like that. We have a few of their locations that we're marketing for. So it's stuff like that. It's kind of all across the board. Oh, this one's really cool. We have a bakery, an Italian deli slash bakery that's been around for like very historic place, 115 years or something 107 years actually. And we do their marketing, and that's been so much fun. People go crazy for that place, and it is so cool. So yeah, that's what I do for a living. At this point, I do consider YouTube work though, because I am making money from it. And I do have aspirations to make it my full-time job. I'm working so hard to get to that point. So that's another thing I do for a living. And then also I'm trying to build out a real estate investment portfolio. Right now I have one duplex and then one plot of land. And just working on building that out as well. And then obviously dividend investing. So got some money coming in a few different ways. But I will tell you this YouTube stuff, guys, is definitely my favorite. I love doing this. It's so much fun. It's right up my alley too. Even before doing this, even before like my marketing gig, I've probably for the last 10 years or so, I've had a camera in my hand, just pictures and video. I always kind of lean more towards video. It's always been interesting to me. So it was pretty fun to jump into this YouTube stuff. So yeah, anyway, Andy here says, what's a DRIP? So DRIP stands for Dividend Reinvestment Plan. And basically what it does, Andy, like when you buy a dividend stock, you can turn DRIP on, and usually it's like it automatically goes on, and it's an automatic dividend reinvestment. So let's say you get a dividend from Coca-Cola. When that comes in, with DRIP on, that dividend will be automatically reinvested back into the company from which you were paid from. So if you get one from Coca-Cola, it'll be automatically reinvested back into Coca-Cola, if that makes sense. And you can turn that on and off. And that's what the whole point of this video was about. Let's see here, guys. Oh, okay. Really good question. With the hit MO got from the FDA, do you plan to sell your shares? Do you plan to hold? Are you still bullish to buy more shares? I'm still going to hold. I don't plan on selling Altria Group. In fact, I've been buying some more, not too much more, just kind of throwing a little bit more money into it. Altria is always just because of the nature of the business, they're always like regulation's always going to be one of the risks with the company. And even so, like there were two key pieces of news that came out, right? So one of them was the government's attempt to ban, or the FDA's attempt to lower nicotine levels to a point where they are non-addictive, which effectively would, well, that's like one of the moats for this company, right? It's like people get hooked on this stuff and then they can't stop buying it. And that gives the company pricing power, right? Or the entire industry pricing power. So, no matter how high inflation is or whatnot, people will still buy cigarettes because they're addicted to them, which, is not the most healthy thing, but it is what it is. And then the other piece of news has to do with Juul. The FDA wanted to, or I think it was the FDA, they wanted to remove Juul from, shelves here in the United States. So the Juul wouldn't be able to be sold. But that's not going into effect, at least not yet. So, this kind of stuff happens with these types of companies. This is not their first go around with the U.S. government, and I'm sure it won't be their last. And, with that said, they're still a dividend king. They still pay a really high dividend, and they're still a cash behemoth. So I still feel comfortable owning Altria Group. But if you don't, like, there's some other really great alternatives there too. Like Philip Morris, great alternative with more international exposure and across the world. There's not as much regulation. Well, I don't know. I shouldn't say that, but you go over to Europe. I think people smoke a lot more in Europe than they do in the United States. I could have that wrong, but that's just my perception from my point of view. And like I said, I could have that wrong, but yeah, internationally too, you might be a little bit, there might be a little bit less risk investing in an international tobacco company like Philip Morris, or even I think BTI, British Tobacco. So anyway, yeah, hopefully that makes sense. It was Harris. Harris said, I dared you to do the 1942 tequila shot. Man, I don't have any 1942. I wouldn't buy it either just for this because it's pretty pricey. I usually drink like cheap tequila or whatnot, like Trader Joe's tequila. So, but I'll do a shot. Actually, kind of fun. When I was on this Mexico trip, one of the like bachelor party things we did for the groom is we went to this really cool tequila tasting tour. And what it was, I'd never done anything like it. And like people who drink tequila, it's usually like in a margarita, or you just take a shot of it, right? This was different. It was very cool. It's actually very educational, and we got to learn about the history behind the spirit. And we got to try 6 different types of tequila, from like Blanco, which is like clear tequila, Reposado, which is the brown colored tequila you see, Mezcal, which is a more smoky kind of tequila. Actually, all tequila is Mezcal, but Mezcal is a particular kind. It's definitely gaining popularity, and some others as well. And it was just super cool. In between each tasting too, we had food that was paired with it. Very cool experience. And so, just so you guys know too, if you ever want to learn the way to, I guess, drink tequila and take it all in, what you do, you inhale, take a sip, swirl it around in your mouth and get all the flavor. It'll burn your tongue a little bit. Get the flavor, and then you swallow it. And the craziest thing too, because like when you drink it, it burns your throat. Not when you do it this way. When you really take it in and get all the flavor, it's like it goes down just like this little glass of milk is going down. It was so interesting, but it was such a fun experience. Del Bomb right here says, nah, you got to go 10 rounds with Jose. Dude, I don't think so. Oh, I don't think so. Hey, okay. I cannot believe I'm just now bringing this up. Guys, have you been keeping up with this everything money versus financial education drama? Have you guys been following this? Let me know in the live chat if you've been following this. Let me know your thoughts on this, because this is very interesting to me. Very interesting to me. And while you guys are leaving some comments there, I'm going to answer this question here from TG, who says, what would you say is the top 2 dividend stocks that a new investor should get that's down more than 25% this year? You know what? That's That's a really great question. So first of all, if you are a brand new investor just getting into dividend stocks, I would highly recommend you make like an ETF the base of your portfolio. And then TG, in case you don't know what an ETF is, it's an exchange traded fund, and basically it's a big basket of stocks you can buy. So within this one ETF, you could buy like VTI, or which tracks the entire stock market, VOO tracks the S&P 500, or even SCHD, which is basically a dividend stock focused ETF. Highly recommend that one. make that the base of your portfolio, and then you can get exposure to, like 100, well, in the case of SCHD, I think it's like 100 or a couple hundred different companies just by buying that one ETF. And it's a great way to reduce the amount of risk you take on, which is important as a new investor, I think. So I would highly recommend making that like the base of your portfolio, and then maybe choosing like one or two or possibly, three other individual stocks around that. And some of my favorite stocks, I don't know that these ones aren't necessarily down 25% this year, but I personally really like Starbucks. I really like Target. I really like Procter and Gamble. I don't think you can go wrong with like a Coca-Cola or a Pepsi. Even Snap-on, or Lowe's. Lowe's is a great company too. I think you should look for these high quality companies, really high quality companies. A couple of the ones that I mentioned, like Coca-Cola or Pepsi or Procter and Gamble, they're gonna trade at a higher premium. They're not going to be as affordably valued as some of the other ones I mentioned, like Lowe's, or you could make the argument for Starbucks because it still has a really high PE ratio. But hopefully you catch my drift. But that's, if you're a brand new investor, that's how I'd start out. But I do like, in your question, I do like that you are taking value into account and are already looking for stocks that are discounted and are not super expensive. I think that's great that you're already clued into that. So good job there. And you know what? Actually, let me. I'm going to take a screenshot of this because this might actually be a good video to make. So yeah, I'm going to take a screenshot of this. It might look here. Let me do this. Sorry, guys. Bear with me as I do this. Okay. But yeah, I think that was a really good question. I think I could actually make a pretty solid video around that. Okay. And then like Hercules said too, the bank stocks are really attractive right now. He's right. Bank of America's down a lot. JP Morgan's down a lot. So yeah, there's a lot of good options out there right now. Let's see, guys. I want to find where you guys are talking about. The drama. The drama. And real quick, guys. Ryan just popped in not too long ago. I'm late, but I'm glad I'm here. I'm glad you're here too, man. Welcome to the party. Glad to have you. And having said that, if any of you guys have joined recently and I haven't said what's up, thank you all for hopping on and seeing what we've got going on here. And also, thank you guys who have been watching from the start and have just clicked at all. I'm so stoked that you guys come here to hang out and talk dividend stocks with me. Because if I didn't have you guys, I would just be talking to my cat, wherever he is, about dividend stocks. And yeah, I don't know. I'm sure you guys feel the same way. It's so hard to find someone like that you actually physically know in person that is into this stuff. It's like such an acquired taste. Like I spent the last almost the last week with all of my lifelong best friends. We've all been best friends since kindergarten. There's like 4 of us. Not one of them is into this stuff. And one of them will ask me about it. He's more kind of interested in real estate, like dipping his toe into that water. A lot of parallels between real estate and investing in dividend stocks too. And he was kind of asking me about it, and I'm glad he's asking questions and curious, but I don't think he'll pull the trigger on it, unfortunately. We'll see. Maybe if we keep having conversations about it, that'll change. I hope it does, because he'd really like it. Anyway, Andy wants to know, what state are you moving to? I'm planning to move to Nevada, actually. I'm planning on moving to Las Vegas. In fact, my girlfriend and we've been looking at places the last couple weeks and actually started applying to one. So yeah, hopefully in the next couple months we'll be making that move. Very exciting. It'll be a very big decision, and it'll be scary because I've for the most part I've pretty much always lived in this area, but yeah, I'll tell you guys what, I'm feeling kind of ready for change, ready to see something new, and I think it'll be good to get out of my comfort zone here. So yeah. Anyway, Comic Book says, just curious if your work provides a pension and or a 401k. If so, what do you invest in for your 401k? No, neither, man. I'm doing it all myself. Yeah, doing it all myself. And so, I have my main taxable brokerage account, which you guys know, and then I have my Roth IRA, which I started about 6 months ago at the beginning of the year. So that's kind of it. And then I'm, hoping to build out a real estate portfolio in time. Dividend investing here really is my main focus. But yeah, my goal just overall, really, guys, is the same with many of you I know, is to just build these investments, whether it's dividend stocks or real estate or what have you, to a point where it's like you're just making money in your sleep. Like that's why we're doing this, right? To have income replacing cash flow just coming in on autopilot. Like what is better than that? Like it's a long journey. It's not easy. It's sometimes very boring. Like looking at the companies like looking at Watsco a couple minutes ago, heating and refrigeration and air conditioning and stuff like that. It's not always fun, but it's so worth it, man. So cool. It could be life changing. I really think like what we're doing here is, what we're all doing with our investing journeys. It's going to change our lives at some point. It's, and I'm proud of you guys for taking the leap into that. Yeah. So Fuhat here says, I don't know, dog, you're shilling cancer. I know. Like, well, I'm not shilling cancer. I wouldn't, I think that's a bit of a stretch, but I understand what you're saying. Like I'm investing in, I guess one would say, supporting a company that makes these products that are not good for you. But Fuhat, like expanding on that a little bit, do you think Coca-Cola is good for people? You think McDonald's is good for people? You think, look at all the chemicals that are even in soap, like Procter & Gamble, or even in deodorant. Like, man, you could make the argument that so many things are bad for you. And at the end of the day, like we're all self-conscious individuals, adults that can make our own decisions. Like, so it is what it is. I don't really know what else to say. I don't really know what else to say, but to that, but yeah, I don't know. I think that's a really short-sighted way to look at it, to be honest with you. Andy here says, you saw the Misfits at Aftershock? No, I didn't, man. I love the Misfits. I love punk rock, but no, I didn't. Aftershock gets pretty wild here, though. And also Fuhat, too, like going back, like that wasn't a slight to you at all, either. Just so you know, like I appreciate your opinion and I appreciate you leaving comments in the live chat here, but I disagree with you on that. Okay, let's get to this everything money financial education drama here real quick. Okay, so let's see. So Fuhat, I saw you had a comment on that. Okay, so Nick, where was it? Oh, okay. Did you say everything money banned you? Why did they ban you? What happened? And then Cami here says, ugh, Paul from Everything Money is such a douchebag. Man, how do I word this? I feel like I've learned a lot from watching Everything Money. I like their 8 pillars strategy. I think that's pretty helpful, and it's a very straightforward way to value stocks. It's a good step-by-step thing, I think. But yeah, I think... and I think Paul knows his stuff. And like I said, I've learned a lot. But yeah, I don't know. Sometimes he seems a bit arrogant. And he's probably a nice guy in person. I don't know. But you know what, actually? One of those videos, I think it was the one with Seth, who's the guy with the beard. There was the one with Seth talking. He's dressed in like the beekeeper outfit. It was just him talking for like 8 minutes straight. Basically like pumping up Paul. And at one point he said Paul is so serious that he once dared or bet one of his friends that he wouldn't cut off the tip of his finger for like $13,000. And I was like, are you saying that to like are you saying that to how do I say this? That seemed odd to me. That was, I heard that and I was like, really? Like you're like, think that's cool? I don't know. That's odd to me. That's odd. Anyway, moving on. Nick here says, I've enjoyed content from both those channels, but don't take investment advice from either. Yeah, early on before I started YouTube and like early on in my investing journey, I watched a lot of financial education, a lot of his older videos especially. And I like Jeremy seems like a cool guy, I think. But yeah, I definitely don't like a lot of those stock picks. I'd never buy a lot of that stuff like Tattooed Chef or, I mean, even Tesla. I would never see myself buying Tesla. And furthermore, I don't think a lot of those companies are great ones for newer investors to get into. And there's a lot of people who come to YouTube looking for help with investing and looking for investment advice. And as I'm sure many of you guys know, a lot of people will hear things they say that creators like us, like stocks that we talk about, and there's not much research that happens after that, which I don't recommend, guys. Everything I say, like forever, take it with a grain of salt and double check it and do your own research, and even push back if I'm tripping. Like I said earlier, you guys keep me honest there in the comments. You guys keep me honest in the live chat, so that's definitely necessary, right? And so yeah, I don't know. I don't resonate that much with Jeremy's style of investing, although I do know he does have a dedicated dividend portfolio, so that's cool. And then Everything Money, they talk about. I know they talk about Intel a lot. Like they just recently put out a video on Intel. There's been some other stocks they talk about that I know, like that I talk about or that I have in my own portfolio. So that's interesting to me. Let's see here. Let's keep going. Okay, Josh right here says those Everything Money guys are clowns, especially the Short Lord one. I think that's Paul he's talking about. Well, Jeremy is a clown too, but whatever. It's just a clown show. Dude, yeah, I think that's the best way to put it. The whole thing is stupid. There's a part of me that thinks too, and you can go to Everything Money's channel and compare the views on what they're getting when they're kind of, I don't know, taking shots like they are. The views are way up compared to their normal videos. Like Jeremy did say that in a video, and he did have a point there. And I do think that is part of their strategy with calling out all these other finance creators. Not that they're not justified in some of the things they're saying, but I definitely think that is part of their intent. And to me, as a viewer, as someone in the audience, and as someone who, like I said, has learned a lot from watching them, I wish they would just, I don't know, I wish they would just keep it about the stocks and not try to bring others down to pump themselves up. And this is not, like, Jeremy's not the first one they've gone after. They've gone after a few other people too, like Stockmo. They went after Robert Kiyosaki. And it's not, like I said, it's not that they're not justified in some of the things they're saying. But I don't know. It kind of leaves a bad taste in my mouth. Let's see. Fuhad, is soap killing though? I don't know. I don't think people are eating soap, but that was just one example. But I mean, McDonald's and, man, even Starbucks, like too much Starbucks is definitely not good for you. So I don't know. I'm just basically the point I was trying to make, and you guys let me know in the live chat if you agree or disagree, is that there's just all these other things that we can invest in that are just, they're not good. It's I don't want to say it's exactly the same thing as investing in companies like Altria Group and manufacture tobacco-based products, but I mean, there's other things out there that you can invest in that are not good either. Like Fuhad, I don't know. We don't have to keep going in circles about this because it is what it is. But yeah, I don't know. That's just my take on it. Nick, I was just about to say, if you invest in Coca-Cola or McDonald's and get on a high horse about Altria, you need to step back and evaluate. But to each their own, invest in what you're comfortable. Yeah, I think that's the bottom line. Like, to each their own, and yeah, whatever you feel comfortable investing in, go for it. But man, don't give me a hard time about investing in Altria. Really, like, it's not, like I said, I appreciate your opinion, but I'm just leaving it at that. Oh man, Coheed and Cambria and Alkaline Trio. Yeah, man, I love both those guys. That's cool. I've never seen Coheed, but I've heard that they are fantastic live. My best friend that I was just with, he went to see them sometime last year, and yeah, he said it was a great show. Great show. Let's see. Jim here says, going back to the drama, Paul reminds me of someone who spent a lot of time in high school getting shoved in lockers and getting his lunch money stolen. Maybe. Or maybe I don't know, he seems kind of like a bully a little bit. I don't know. You know what he seems like? He seems like the kind of guy that went to Cornell and was like in a fraternity at Cornell or something like that. I don't know if that paints a picture, but Shamir says, I don't mind Paul from Everything Money, but that's just me. For the most part, I don't really mind him either. But there's been times where there's just times where the arrogance comes out a little bit, and I've seen him go after like rudely go after people in the comments, go after his subscribers, and obviously I'm now going out after other people. What man? What are you what the effing at? Let's see. Paul inherited all his money from his parents. I haven't heard that. Let's see. Okay, Josh here says, Paul is kind of a tool. I like Learn to Invest, though. I like Learn to Invest, too. I like Jimmy. I need to watch more of his stuff. Let's see. Okay, let's see. I think we're about to call it a night, guys. One more comment here. Sorry, I'm just reading through these comments. What the heck? Sorry, guys. Okay. Phil, this is exactly how I feel about it. This is the last comment about Everything Money. Then we're going to move on to the last comment of the night. So I like Everything Money channel as long as they talk about stocks. When they go after other YouTubers, I just don't watch it. I watch for information, not drama. Yeah, couldn't agree more. And when I go through the comments, I'm seeing that sentiment a lot too. A lot of people are like, dude, just come on, like, you guys, this is leaving a bad taste in a lot of people's mouths. But then there's other people too who are like into it. They're like, yeah, screw Jeremy. Or even on the other side, you go to Jeremy's comments, yeah, screw Everything Money. They don't know what they're talking about, whatever. Yeah, that's just is what it is. There's going to be people on both sides. Anyway, guys, this is the last comment of the night. Then we're gonna end it up. So Dreamer here says, hey Ryan, what do you think about technical analysis versus company belief, such as Apple or Starbucks for long term? And that's a really good question. You know, you guys let me know in the live chats too. I personally don't I really don't do any technical analysis. I actually don't know anything about it. I more so go for the fundamental analysis. I don't know if this is considered technical analysis. I mean, I'll look at share price performance and see in general what the stock chart's doing. But outside of that, especially if I'm looking at a company from a long-term perspective as a long-term investment, it really is all about the fundamentals. And, you know, it's about the business itself, not just what the stock price is doing. So, yeah, I don't know. Hopefully that answers your question. Anyway, let's see. Is there anything else? This is where I get in trouble, guys, because it's hard to it's hard to sign off. But anyway, looks like this is pretty much it. I'll wrap it up here, guys. But thank you guys so much for joining. If you haven't done so already, I should have mentioned this earlier in the video or throughout. But if you guys haven't done so already, please leave a thumbs up if you enjoyed watching this live stream, and also hit that subscribe button if you would like to, you know, follow along on the journey. We're putting out multiple videos every single week. Every single week we're up to 3 videos: Sunday, Wednesday, Friday. Friday being the live stream. So yeah, I'd love it if you guys followed along. I appreciate all of you for tuning in to this live stream. I had a lot of fun chatting it up with you with my glass of milk right here. And I hope you guys enjoyed it as well. Once again, I always appreciate you guys tuning in and taking time to just hear me ramble on and talk mostly nonsense about this stuff. So anyway, yeah, there's one more thing. Oh, just a reminder too, no video on Wednesday. We're going to do another live stream on Friday. Oh, guys, God, I'm sorry. Last thing before you go, talking about all this drama stuff. What do you guys think about reaction videos? I'm going to put a community post about it with a poll, but I want to know your guys' thoughts. What do you think about reaction videos? There's this one video, it's called, like, I don't remember. I think it's In the Money. Maybe that's the channel. But he has a video called Why Dividends Suck. And I feel like it'd be a really good video to make a reaction on. Like I said, I'll put a community post out about it tomorrow, and you guys can watch that video. Would you guys be curious to see any sort of reaction stuff, or is that kind of lame, not really what you're interested in? If you guys are interested in it, I'll make a video. It might be worth trying out. But if it's something that's lame, I guess we'll see on the poll tomorrow. I'm not going to do it. But yeah, okay. See, this is what I thought. This is kind of what I thought I would get. You're better than reaction videos. And see, that's kind of what I think too. You know, I don't want to do it if it's too out of left field, and I also don't want to do it if it's too close to the drama, which I wouldn't be like ripping on this dude, but there's just some things he said about dividends that I think he might get wrong. But anyway, I don't know. I need to chew on it. But if the majority's like, nah, not into it, I won't do it. So, okay. Well, yeah. That's helpful. It's helpful to get this feedback. Actually, I appreciate you guys' as honesty. Okay, well, I'm getting some mixed emotions here. Fuhat says read Howard Marks. Yeah, Howard Marks is awesome. I don't know if you're familiar with the book Richer, Wiser, Happier, but I know that the author of that, what's the author's name? I don't remember. Oh, William something or other. He interviewed Howard Marks, and it was great. I also think they were on, there's this podcast, the Investors podcast. They have We Study Billionaires, but they did an interview with Howard Marks in there, and it was really interesting. There's some really interesting investors out there. It's always good to listen to that. But yeah, Howard Marks is great. Thanks for bringing him up. Okay. Yeah, I'm going to think on this reaction thing. I might. Yeah, I don't know. I'll think about it. But I appreciate you guys' opinion here. We'll see. I mean, leave me a comment tomorrow in the poll or whatever if you want to. Definitely vote on it. But yeah, Kama, yeah, this is kind of what I think too about it. But I don't know. I'm so torn, as you can tell. Reaction videos are advanced clickbait. When the YouTuber doesn't have anything to make on a video, keep doing what you're doing. And that's the thing. Like, sorry guys, I know I'm just trying to. I know. You don't need to say it. I know. I always do this. But so just to show you, I have all of these video ideas. This is a note in my phone just filled with video ideas. So I'm not at any shortage of ideas by any means. But, I am always trying to think of different things to do that's not just like buy this cheap dividend stock or, I do kind of want to switch it up, just keep it interesting for everyone. But if that's not up people's alley, then I won't. I don't want to do it if it's not what the community wants. And I also don't want to do it if it's going to leave a bad taste in everyone's mouth. Because like I said, I don't want to be like the everything money, I don't want to do that. That's not me. That's not what I want to do. So anyway, thank you guys for your opinion there. And I will seriously, we're going to close it out here. So thank you guys so much again for watching. I really appreciate you. Hope you guys have a great night. And I will see you on Friday for another live stream. Jim, last comment. I'll leave with this. I agree. I need to figure that out. All right, guys, have a great night. I'll see you next time.